It sort of begs the question, are people pricing in too much perfection?
Yes.
Okay,
yes.
So then where exactly, especially given the fact that it really has been led by the Magnificent Seven, or what Mike Wilson thinks should be the Magnificent Four. But I am curious about whether you see sort of a risk-off kind of tone, especially given some of the consensus that we've been hearing, everyone kind of being bulled up.
Yeah, I mean, I think the everything up rally is done. I think we need to parse through and really figure out what parts of the story we want and we want to hedge. There's a reason that U.S. tech is where it is. I still like the earnings power, and as a little bit more of a longer-term investor rather than kind of a trader, if you will, it's undeniable that they have this moat that is the envy to any other company in the world. The U.S. exceptionalism is a story that's really starting to come out. What the Fed is focused on versus what the ECB, what the BOE, and a lot of the other central banks are worried about is very, very different. And then, I think that there is tail risk from both inflation not necessarily packaging as well as the market is saying. You can hedge that. Energy is a hedge if you wanted to approach it from an equity perspective. And then recessionary-wise, there are certain markets in the world that have more value, if you will. The UK comes to mind from the perspective of a very staples-driven value kind of market.